Hi, this is Elliot Wave Sage. I want to go ahead and do a quick market update. Like always, none of this is financial advice. Always do what's best for you. So the Fed is going to make a decision on interest rates tomorrow. A lot of people feel that they will not raise rates, signal a pause, and possibly one more in November. Um, and maybe, and we'll look at the data and we'll decide. And this type of talk and thinking was very similar with the first pause that Arthur Burns did in the 1970s. They kind of talked themselves out of increase in rates, and there was a lot of political pressure too at the time. And once they did that, boom, man, commodities mooned, gold mooned, silver mooned, oil mooned. Like they all did wave three of three of their grand super cycle, and that's what will happen again. So if the Fed does pause, I think it could be a catastrophe for inflation. And it's really, you have to follow the 1970s playbook to a T. So you know the commodities are going to run hot if that happens, if they pause. Commodities will continue to run. It would be a massive policy mistake given where the commodities are. And of course, as you know, we do measure CPI, but CPI is not measured the way it was 20 or 30 years ago. They've made a lot of changes to it so they would get a favorable number, and now it's still running hot even with the diluted CPI calculations that they have. So I think in the end, the rates just aren't high enough to stop this inflationary, increase that we're seeing. And even if they do a quarter point tomorrow, it's still not enough. But if they do a quarter point, the market will be really pissed off and it will sell off. But it's still not enough. They need to really go much higher than where we are. And the 2 year is showing us where it is going. Yes, it is going to these 7 and 8% levels here, 8 and 4. So that can give you an idea where inflation really is. So here's the channel. We start at the end of the bear phase. We had this ghost spike the other day that freaked everyone out, and looks like it's gone. It's not in the data anymore. But now we're kind of in this bear market phase. So the rates on the 2 year should go higher. So what this is telling me, we should see more inflation, more rate increases, and yes, maybe there could even be also some government constitutional problems that also get priced in the longer end, for political instability coming. So here we go. We have kind of 3 swings up on this. So there is still a chance the Fed pause could be seen bullish and we pull back and then we come up higher later. We could still be in this too. So that's why gaming the Fed meeting is stupid, because there's just too many possibilities. But the ultimate trend is going to still be higher, and I want to position myself for that situation. And same thing with the indices. So the Dow Jones broke this trend line that I have here. We made a good break today, and it looks like some kind of back test of that break. Trying to back test it. This could be another 1 2 1 2. It could be a 1 2 3 4 5 and back up and down. Too many possibilities. So I just think you had your opportunity to short here and here, and if you haven't done that, well, then it's too late. Now if we do decide to run up again, we could still be in some kind of consolidation pattern here. We could still even be in this too, they'll do something like that. So many possibilities. So I don't like to even worry about it, but we did make that breakdown, and then we tested and we bounced off of the resistance support line, and this I call it the 1987 line. And as you know, in 1987, once the market started trading in this area, the analog, that's when it just kind of waterfall sell off and crashed. So once we get below, and ironically we bounced right where we needed to, but if we go below this area, then it's a very dangerous time to be in a dip buyer. a YOLO, I just want to scalp some longs. Because once the circuit breaker's triggered, those calls are, calls stay open and you can't close them. Remember that. You don't get nothing. The house takes your money. It's like all your money's gone. All your chips are gone. So you got to understand what you're trading if you're trying to counter trend trade. And I see a lot of traders, long Amazon, long Apple, fill the gap, long this, buy this, call this. You one day, well, it won't have. It's going to end in a catastrophe for you. I promise you, it's going to. So the trend is lower. So it would be a better strategy to short pops and worry about short Apple, short Nvidia, short Amazon. That's the right side of the trade to be on right now. If you're trying to counter trend trade, you will have a catastrophe. You're going to lose all your money. You're going to have to go back to whatever second job you have, and that will be your primary job. Or you're going to have to get another job if this is what you do, because you will lose all your money. I am telling you guys, if we are trading in this area I have circled, the market is in extreme danger. And ironically, we're going into October when the market has historically crashed in October so many times in history. October is one of the most dangerous months for market crashes. Just keep that in mind. If you keep trying to be a YOLO bounce by the dip guy or gal, you are playing with fire even intraday. If your circuit breaker is triggered, then you can't close your position. So here we go, guys. So this is the market right now. In the SPY, I like a 1-2-1-2 count better here. It's struggling to get over this support that's now resistance. Here it tried to break this trend line and was saved, and now it's kind of sandwiched in between two. It could easily have a massive sell-off tomorrow. The other option is it's still in some kind of two-wave and a flat, but I still think ultimately we drop. The most bullish outcome is a flat and two comes back up to fill this gap, and then collapses. And if we do that, I'll add more to my short position. But here, I've already got a great position. I'm just watching on the sidelines. And if we break down, great. If we bounce, we'll just add more in the right areas that we need to. And you can kind of see where we're heading, right? We had to buy here, a short here, another short here, and we just keep kind of going lower. And I think that will continue. But there will be some separation coming. We're due for some separation in the Fed meeting. Could be that moment, so we'll wait and see what happens. And then the triple Qs looks like, again, a 1-2-1-2. Here we're in 2 again. And again, the 2 could still come up higher. I would expect it to fail and go lower. So it's really tough to say. But again, looking for that separation, and we should get that soon. And the IWM is also in a 1-2-1-2. Same thing. It could still be 2 here. It's a lot of possibilities, but we have now broken, this neckline. So this really should tell you that we should be down in this area. This pattern is kind of now playing out to the downside. So the futures, futures don't really tell a different story. I mean, we could look at the Dow futures here. Again, 1-2-1-2. We'll see if we break down again here, 1-2-1-2. But it doesn't have to be. This 2 could still come up. And then the NASDAQ, kind of trying to come out of this bear flag. Again, in a 1-2-1-2. And the Russell in a series of a lot of 1-2s, ready for a massive sell-off here. So that's kind of what I'm looking at. China is still trying to grind its way lower. It should be in a wave 3 soon on the downside. Bitcoin, talked about a possibility of this still continuing higher, and it can do that. And now when I look at this is definitely a bigger connector. It's not a swing here, so we have to change the labeling around to a bigger connector. So I actually think we could see even more upside here in Bitcoin. We'll change that to an ABC, a three-wave move up. Here, a three-wave move down and a five-wave up. So, just kind of, you're going to have to understand that Bitcoin, loves to destroy traders. So this is the most likely scenario now that I can see is a retest of this high at 28,000. But you can also see it potentially run as high as 28.89 here. So a lot of possibilities, but ultimately we will be lower in this area that I have highlighted. It's just how do we get there? The market will have to decide for us. So now that's what I'm looking at for the connector. The surprise would be that it's already finished here, and that would be a run-in flat. So it's possible, but it's not likely to me that would happen. So that's why I wouldn't try to play the long side of this trade. I would just kind of sit back and see if we can get up to this 28.8, 29,000 area and then re-enter on the short side. If that's the setup, that's the setup. If the setup isn't there, then it's really no trade on Bitcoin. It's really just watching it and see what happens if you don't have a position. And then oil, of course, has been a lot of talk. It looks like we did finish this three wave and we're now in this four. As you can see, the degree of this four, it should be more substantial. But unfortunately, it should rebound and go higher again. So this is kind of the count for now. Of course, the count can always be off and X could be done, but it's unlikely. It's more likely we still have more upside in rates and more upside in oil, which means more upside in commodities. So I don't know what that means fundamentally, but I'm just telling you that's what it looks like is going to happen. All right, the bond market, we talked about the 2-year entering a point where, this could be a 1, 2, 3, 4, 5 for 1 and we pull back tomorrow and then come out later. Or it could be the worst case scenario, a 1, 2, 1, 2, 1, 2, and we literally get a massive breakout tomorrow on the 2-year. That would be a market crash, guys. So if this is the count, the indices are going to crash at any moment if this is the count. Okay? And you can't rule this count out. I can't rule this count out. This count is valid. It's still valid. Not likely, but if this plays out, then we're going to have a massive move higher. What's the Fed going to do? Come out and raise 100 basis points tomorrow? Maybe he will do a Paul Volcker. Boom, 6% rates. Take that, market. Flex his muscles and show he's not playing. Wouldn't that be something? No one would price that in. Everything would go batshit crazy. And yes, oil, all that shit would crash. It would do what Paul Volcker did, basically could come in a recession, but yeah, would inflation get hammered down? Hell yeah. So I don't know, but this is one way of interpreting the chart, but it's not likely. The most likely scenario is it's some kind of impulse that's about to finish up with a pullback. And then the 10-year is another one. It's starting to make its way higher, and it needs its 3 of 3. And again, this could be a 1, 2, 1, 2, 1, 2, and it's going to have a 3 of 3 moment to the upside, market crash, or it's finished here and will pull back to maybe 4, 2, and then rally higher later. So we'll have to wait and see what happens tomorrow. Dollar index been really tricky, but still persistently higher despite these little mini sell-offs we've had. To me, it looks like this pullback's pretty severe. It looks like it's a 4 though, so one more high, and then we should get a much bigger sideways consolidation of the dollar. the move that may be different here is this B. We could still be in B, but it's not probable because it would be too complex for the swings. So I think it's more likely another high, and then we'll get a much longer sideways action, and then we'll get a massive move higher later, something like that. That's kind of what I'm thinking right now, but do what's best for you. The VIX was really interesting today. It tried to make a higher high, and it did, and it pulled back. This is a bullish sequence. This is very bullish, this type of price action. This shows that there should be more continuation higher in the VIX. So this favors, this kind of favors more downside to get the VIX up to the 16 area. This would finish the sequence. So this sequence should push higher. So my money is on a sell-off tomorrow, not a pump on the news because of this the sequence I'm seeing in the VIX. It's pretty bullish setup here, and then when then we could see a bigger pullback later, only to come out for the final breakout. The surprise for me would be if it did drop, but that would be very short-lived, and I would be looking for a drop of the VIX down to 1361, and then it should rocket higher when it comes into this area as a flat, as some kind of flat. So I don't think this will be this isn't good. I don't think this could happen. There's always a chance, but once this is in this area, this would be a long the VIX opportunity to go long VIX for this. But my money is on some kind of 1-2-1-2 and out tomorrow. Okay, guys, and then technology, Apple. You know, it's really frustrating day traders because they want to fill these gaps. And again, I don't know why people all of a sudden are obsessed with gap trading. I can show you open gaps, you know, from a long time ago that have never been filled on the upside. So this looks like some kind of flat correction into here. 5-wave move up that looks like it's almost finished or could be finished. This is going lower, guys. That means the market's going lower. Google should be finished this 5 at any moment. May already be finished here. Everyone loves Tesla, but Tesla's been weak. This looks like 5 down. It looks like the first wave is finished, and we're in wave 2. And again, wave 2 can go higher, but wave 3 is coming. And let's see if there's anything else. Disney's been pretty weak lately. Yeah, Amazon pulling back into 2. I have here Netflix made a lower low, very bearish, should pull back more. Nvidia, let's take a look at how it's doing. Again, it's in a 1-2-1-2 sequence. I don't call this a 3-4. I'm not going to call it because I want more extension lower. So I still don't think it's had its wave 3 of 3 moment yet on the downside. Something like that. Microsoft hit the sell area exactly, the short area dumped, and looks like it's finished its first impulse down, and it should be pulling back down and more downside. So just giving you guys some ideas on where I think the market is. Looking at Shopify again, looking for that 3 swing move down into here, so a lot more downside. You know, Trade Desk dumped from the short area, heading down, and it's wave 3 now. And yeah, just keeping an eye on things. DraftKings looks like it's making its pullback to finish wave 4. Robinhood, haven't looked at it, still in its Y wave down to $8-9. You know, just kind of looking through different stocks that I follow. People are so excited about Enphase, but time to get excited is down at $70, not here. For solar, still making its way down. No wave 3 of 3 yet, but that's coming. Should go lower, much lower given the sequence in tan. That should go all the way down. Yes, the $22, $23. It's just, you know, what the chart says, not what I, you know, wish it to be. K-Web, just all this. So all this stuff selling off. NEO finally took the dump in the Y wave like we expected, looking for the $7 area. in a 1 2 1 2, so it's in a 3 of 3 on the downside right now. So just kind of showing you guys the bearishness of the market underneath the hood, so to speak. Underneath the hood. We haven't forgot about pod. This wasn't a trade idea. It turned into a grand super cycle correction. The new target is 145, and I will be picking up a piece of that here when we get there, and we should get there. It's got massive long-term trend support, Fibonacci support, and my system happens to have the price target all here, confluence. So it's a good area to take another try at it on the long side. So I am keeping an eye on it. We'll keep an eye on that. But I think this is kind of the area I'm looking for. So I am keeping my eye on that. mRNA, I've warned everyone about this, and we took a sharp turn lower, and we could still end up, and I do believe we'll end up down in this area. So if you keep your eyes on that. Nothing else really, interesting to me in the healthcare area that I want to talk about today. Commodities. A lot of people are baffled about these. The stocks aren't following the commodity, but if you were following me, you're not baffled because I told you that the commodity is just a connector. We have oil will go back down, and the commodity, these producers are going to anticipate that. Also, if there's a recession coming, the producers will start pricing that in before we see it. So here we go. Chevron is almost at the short area. It could be there tomorrow, and then a massive move lower should be coming at any moment once we get into here to finish that correction. So that's a warning sign. Let's look at ExxonMobil. Almost finished this B wave, want to break that high, and then we should come in lower. How's the XLE looking? Again, here, this one's a much more complex correction. I'll have to study it more, but I still want to see it drop again. So I do not like FOMOing in the oil market. Just don't like doing it. Because as you know, oil will be pulling back in this wave that I have highlighted. Yes, it's coming down. Yes, all the way down to here. What will cause such a sell-off? What caused the sell-off before in the financial crisis when oil was 100 and it dropped? What happened? Well, the Fed raised rates too high. There was a massive recession. There was a credit event and a mass liquidation across the market. That's probably what's going to happen again in this leg. So my guess is the credit event starts when oil is trading in this area and the interest rates are breaking out, where the TLT is at in the high 80s, in the 80s, and then the dollar index finishes this sideways consolidation, is ready for that move higher. That's the credit event time. That's the real, I think, danger time frame. And look, where's that? Around October 6th. So that's October, man. So I think the market still will be under pressure, but I don't think the real fireworks start until October. That's probably when you get the real massive move lower, like we've always done historically. I think we'll just get some kind of sideways to downwards action, and then we'll get some point into October, and then who knows, how far down we'll go at that point. So that's the market, guys. What happens at the Fed tomorrow is irrelevant. I could care less. If it pumps, fine. I'll be ready to short it. If it gets to my higher targets, which I doubt it will, but if it does, I'll be putting more, more to work. If it doesn't do that and just sells off, great. I'll be printing money all day, and it'll be a great Wednesday for me. Because again, I've already built my positions a long time ago, and I've been just kind of enjoying this downside that we've been experiencing. And this is why I don't like trading the day-to-day price action, especially counter trading calls and counter trading the long entry. So dangerous. If you can get in and out the same day, that's good for now. But if the volatility starts picking up, you better be careful because if you do get a flash crash circuit breaker event, then boom, the casino just took all your money and you're in a 0-day call, 0-day expiration call. It's like bye-bye capital. If you're not in the money, most of you aren't, you trade options outside the money. So boom, all your money's gone. Thank you, have a nice day. And you're like scratching your head like, what the hell just happened? that is a situation that you need to be prepared for, because I believe we'll get some kind of capitulation event, flash crash, real crash, morning where the markets can't open properly. That type of thing is coming in the next, really at any moment up until the end of October. And then if the bulls can delay that, it doesn't happen, we get through October, then I think the bears have ran out of time once again to do their thing, and the market may actually be able to start to grind higher with the seasonality and crash postpone for another day. And then we're looking at January, February, March timeframe for a weakness, and the market should have a pretty good bounce. So the window for the bears is small, and it's getting smaller as the September moves on, but the real fun, the real danger hasn't happened, and we're not in that window yet. But the bears have to start making a move soon. They got to get some separation. The bears have to get separation and break this low to get control of this market and show that, hey, we're in control, and this peak is the B wave peak, and you guys are toast. The longer we stay up here and they burn time, we get towards that end of October, then yes, it's a likelihood we can come out of that for another high, and we got to be careful of that. But right now, I don't want to be buying any positions long on the long side for that. So that's all I've got today. Good luck trading tomorrow. We'll see what happens, and stay safe trading.